over the results of the portfolio calculated through Friday, March the 11th, 2022. Our latest setup, we're just trading this since March the 3rd. Micro Stock Index Portfolio 25. Hypothetical results are down 168.75. We are up on the month. We increased here on this day. We increased to 6 micros on the 200K. So doing well on the month with this setup. We started with 1 on the 3rd, and then increased to 3 micros, and then increased to 6 micros here. And so 4 to 6 micros per 200K right now in this type of market environment is a good allocation. Let's take a look at the results. So far, this setup this year is up 12K, hypothetically speaking. Taking some of our best strategies from the past, getting rid of some of the overnight strategies, getting rid of some of the long-only strategies. Let's take a look at how it would have done, how it's done in the past in 2020 and 2021. Those were up markets on Fed stimulus, and I don't anticipate we'll have another run to the highs, but we could. Anything is possible in this market, and the Fed has been known to pivot, but it would be interesting because inflation has never been this high, so I don't think they can. But the last 9 months of 2021 up 35K. The last 9 months of 2020 is up 32K per micro. We're just talking about 1 micro. Multiply times 10 per E-mini. Hypothetical results. Past performance is not indicative of future results. In 2019, 9K per micro, and that'd be 93K per E-mini. And up almost 15K per micro, or about 150K per E-mini in 2018, 2017. That's one of the lowest volatile years ever, up 43.79.50. So you can see where I'm going with this. This is a setup that works well in the current market volatilities from 2018 forward, and then especially from 2020 forward. We see new levels of volatility, and we've seen more of a down market this year. These markets were, 2020 was down and then it was up. 2020 was up a lot, and 2021 was up a lot, and then 2022 is down. So this is performing in a down market. These strategies work. The market made highs in Q4, in November, depending on which index you look at, and it's been a down market this year, and it's outperformed going down with this setup because we've eliminated a lot of the long-only strategies. We've eliminated some of the overnight strategies that take advantage of the market that rises overnight in a bull market, and we're not really in one. We could go back to one, I guess. It's hard to know why. It's hard to anticipate why that would happen in an inflationary environment. I guess inflation just all of a sudden disappears, commodities crash, and the Fed decides to stay easy money for whatever reason. I don't know why they would make that decision, but I guess we could see another market rally. Otherwise, I think we'll continue to crash. I think the fundamentals are set up for a market that goes down, and January, February, the market's down. March, we're only 12 calendar days into March, and so we basically have nearly 3 full weeks of trading left in March. We have 2 weeks and 4 trading days left in March and in Q1 of 2022. So we've only it's around break even right now for the month. And let's look at it on a drawdown curve, which is more indicative. I love this drawdown curve. It's very cyclical. The cyclicality increases. The speed of the recoveries increase as you go forward on this, because we are using strategies that do work better in this volatility in recent years. And so something that works at a NASDAQ 13,000 or 12,000 in this time frame may not work as well at a NASDAQ 2,000 back here. Much slower value, much different type of market environment when the index levels are at different price levels. We've adjusted the parameters to meet the current index levels and the current volatility levels that we're in right now since 2018, which starts about right here on this chart. 2018 starts right here, and then you can see 2020, the volatility picks up even more. So looking forward to trading the rest of this month. This is the portfolio that we recommend the most, is the Micro Stock Index Portfolio 25. You can scale it up to 10 micros. After that, trade E-minis. And to know what this would look like on E-minis, this would be, you just multiply everything times 10. I'm going to actually add that to this portfolio calculator. I'm going to remove some of these because we're not trading them anymore. And this new market environment, this new volatility, they'll be listed under the old. So some of these will be moved down under the old here when I get a chance to update this spreadsheet. And I'm going to add the stock index portfolio for the E-minis as well. This worst case drawdown happened back in this time frame, and since for the last 10 years, I guess since about 2011, maybe even last 11 years, the worst case drawdown was about 2,700 per micro or 27,000 per E-mini. And this, when I talk about this setup, I'm talking about 25 strategies. So 1 micro per strategy on 25 strategies. It would be 2,700 per micro that you trade on each of the strategies. So if you were to trade all 25 strategies with 1 micro, hypothetically speaking, the worst case drawdown in the last 11 or so years is about 2,700, and since 2008, it's about 3,700. So that's what I wanted to share with you, the weekend update for the portfolio setup. It's been a tough, challenging, volatile year with a lot of our commodity trading systems. We stopped on January the 25th, and we've reset our focus towards the stock index portfolio. We've paused trading at times. We've traded smaller, and we've readjusted, and now we are on to the Micro Stock Index Portfolio 25 right now. And we may make additional adjustments as markets change and as we see new opportunities. So this is the latest through March the 11th, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.